Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve April 2019 University question paper of the subject Innovative Financial Service. Okay, so in this video, basically there are two types of questions which have been asked in practical form. One is based on factor and the other one is based on hire purchase. So both these sums have been solved of April 2019 paper. Okay, so chalo, let us see how to solve the sums. In the question is given that Ruby Factor advances 27 lakhs to Pearl Enterprise against the agreement of providing an advance payment of 90% of receivable and for guaranteed payment after 3 months. Okay, and the rate of interest is 10% compounded quarterly, and factoring commission is 2% of receivables, both collected upfront. You need to compute three things: compute amount actually made available to Pearl, calculate the effective cost of funds made available to Pearl, and assume the interest is collected in arrears and commission is in advance. What will be the effective rate of interest? Okay, so let us see how to solve such kind of sum. Okay, the sum is going to be divided in three parts. So number one, okay, I'll write here number one. First heading will be computation of the amount actually made available to Pearl Enterprise. Okay, now we can have it in like in two column based. Okay, so I'll just put here one amount column just to for us to understand. Okay, now the very first thing, remember, whenever they are giving you anything receivable in percentage form, meaning the amount which has been given is based on that percentage, so we need to find the total. For example, here they said the value is 27 lakhs and 90% receivable, meaning 90% is 27 lakhs, so 100 is how much? We need to find that. Okay, so very first thing will be value of factored receivable, okay, which will be 27 lakhs divided by 90%, so we will get the total value. Like this is a cross multiply. If 90 is 27, so 100 is how much? So we get that value as 30 lakhs. 3 4 5 6. Okay, we get that as 30 lakhs. Number one. Now next, after this, after getting the value, the next thing is always less factor reserve. Factor reserve meaning whatever percentage is given, when you minus it 100%, that will become your factor reserve. So if 90% receivable, 10% will be factor reserve. So if this would be 80, this would have become 20. 10% of what? Of the receivable value. So 30 lakh ka 10% is 3 lakhs. Okay, we subtract it. I will get 27 lakhs. Okay, so this 27 lakhs is nothing but the advance value. So advances. Now from this we have to minus two things. Number one is commission. Now commission is 2% of the first amount, the value of receivable, so 2% of 30 lakhs, which comes to 60,000. Second, we have to less is interest. Okay, now interest ke liye, remember in the question they are giving you interest is at the rate of 10% and always on the advance value. So 27 lakhs 3 4 5 into 10% into now 3 months ka period, so into 3 divided by 12. Okay, so when you solve it, you will get the value of 67,500. So 2,70,000 minus 60 minus 67,500. Okay, the value that you all should get is 25,72,500. This is nothing but the funds made available. That was the very first thing what they'd asked us to find. Now second में they are asked us to find the effective rate, okay, the effective cost. So I'll write it here now. Second, computation of effective cost of fund made available to Pearl Enterprise. Okay, so again I'll make a amount ka column just for us to understand that values, from where the values are coming. Okay, now very first thing, for finding the cost of fund, we need to find the cost of fund. So that is basically your commission and your interest. Okay, so number one, commission. Now commission, the same thing. Okay, it was 2% of 30 lakhs. So 2% of 30 lakhs, which was 60,000. And second one was your interest. So I'll write a interest, which was 27 lakhs into 10% into 3 divided by 12, which came to 67,500. The total of your cost is 1,27,500. Okay, once you got the total cost and once you have the funds available, now I can find the effective cost rate. So my effective cost of funds is equal to, so I'll put the formula here. So it will be the cost 1,27,500 divided by the total amount, that is 25,72,500 into 100. When you solve, we get 4.96%. Now this is per quarter. So I need to find the annualized. So therefore the annualized cost of fund is equal to the formula. Remember the formula, 1 plus the rate. It is 4.96%, so that is nothing but 0.0496 raised to the power of 4, because it is the 4 quarters are there, minus 1. Okay, whatever answer you will get into 100. So when you solve this, that will be 1.0496 raised to the power of 4. When you solve that, minus it with 1 into 100, you should get the final answer as 21.36%. Okay, that was the second part. I hope everyone have got that. Now third may they have asked us to find the annualized, assume that the interest is now collected in arrears and commission in advance, then what will be the new effective rate? Okay, so now let us see how to solve this kind of sum. The third part, so I'm writing here, computation of effective cost of fund made available to Pearl Enterprise when interest is in arrears and commission paid in advance is advanced. Okay, now again how to solve this? Again very simple. Okay, we'll again make a small for the amount part. Now let us see. So see how we start with this. The very first thing, see from here, the advance, whatever was the advance. So basically you're going to solve this whole thing again, but now they're telling you that what if commission is paid but interest is in arrears. So basically you're going to repeat this whole step again here. Okay, so I'll start from the advance point. Now advance is 27 lakhs. Okay, from that less commission, okay, which was again 2% of 30 lakhs, which came to 60,000. So when I minus it, I will get 26 lakhs 40,000. Okay, so the funds made, these are nothing but my funds made available. So my funds made available is given. Now second, the interest part, the effective cost will remain the same because there is no change in that. So my second part to remain the same. My commission was 60,000. My interest was 67,500. When we total it up, it became 1,27,500. When interest is in arrears, meaning here in the first part it won't be added. Okay, second is the normal part. Third, now we need to find the last part, that is the effective cost. So the effective cost is equal to, is very simple, the cost which was 1,27,500 upon the investment, the funds made, that is 26,40,000 into 100, which came to 4.83% per quarter. Now since it is quarter, we need to annualize it. Therefore the annualized cost of fund is equal to same 4.83%, nothing but 0.0483 raised to the power of 4 minus 1 into 100, which comes to 20.76%. Okay, so this is how you all had to solve the sum based on the factoring. Okay, based on factoring from the question paper of 2019. Okay, this is one sum. Now we start with the next one, which is based on hire purchase. So let us see how to solve that particular sum. Okay, now I'll read the question once. Now this is based on hire purchase. The Vaibhu Transport Limited purchased truck from Hindustan Motor Limited on hire purchase basis. So here the purchaser is Vaibhu and Hindustan Motor is the hire vendor. The cash price of the truck was 16 lakhs. The amount was payable as 5 lakh on the date of purchase, that is nothing but your down payment. 4 lakh on 31st March, 4 lakh on 31st March 14, 412,390 on 31st March 15. The Hindustan Motor Limited also charged interest at 5% on the unpaid amount on diminishing balance each year. It closes the account on 31st March every year. You are required to prepare Hindustan Motors account and interest account in the book of Vaibhu Limited according to credit purchase method. Okay. So now let us see how to solve such kind of sum. Okay, for this very first thing what you will have to do is, first we'll make a working note. Okay, we'll make a working note based on what are the installment amount, what is the interest amount, what is the closing balance. For that we'll do a working note. So for that I will be creating a table here. So I'll just pause the video, make the table, and then we will start with the sum. Okay, now so this is interest comma installment calculation. Okay, we have particulars 2012, 13, 14, 15, which is the thing what they are given to us. Now opening balance will be a cash price of a truck. Okay, now in this they are giving you the cash price was 16 lakhs. So I'll note down this as 16 lakhs. Down payment, yes, there was a down payment of 5 lakhs at the first start of the year. There was no interest at the start. Whenever down payment is made, there will never be an interest. So your cash paid is 5 lakhs. So 16 minus 5 is 11 lakh. That is a closing. Last year closing will become current opening. Now installment. The first installment which was paid was 4 lakhs. Interest they said is going to be 5%. So 11 lakh of 5% is 55,000. So always remember, interest plus cash paid together becomes your installment. Okay, so 4 lakh minus 55,000, so that will become 3,45,000. 11 lakh minus 3,45,000 will be your closing 7,55,000. Again closing will become opening for the next year, 7,55,000. The next installment is also 4 lakhs. 755 ka 5% is 37,500. 4 lakhs minus 37,500 will give you 3,62,500. 755 minus 362 is 3,92,750. Again last year will become this year's opening. Last year remember, opening minus cash should be 0. So I'll have to put down the same value, only then I can get a 0 value. Installment made was 4,12,390. So the difference between the two is 19,640. Okay, so that's my difference, 19,640. So with that, we were able to complete this entire working. So now they have asked us to prepare 2 accounts. Okay, here they have asked us to prepare 2 accounts. The very first they said in the books of Vaibhu, so I'll write here. In the books of Vibhu, we have to, number 1, prepare Hindustan Motor Limited account. And second, we have to prepare interest account. Okay, so what I'll do here is, first I'll make the columns and then we'll see how to solve the sum. Okay, so I'll write here date, particulars, amount, date, particulars, amount. Now remember, when you're making, now this is hire vendor account. Okay, Hindustan Motor is the hire vendor. So from here we are going to purchase. We have Vibhu here. Okay, so we are going to purchase something here. We are purchasing basically, the machinery account. So now in the vendors account, okay, remember in the vendors account, the very first thing what you need to note down is on 1st April 2012 we bought a truck. So I'll write here, buy truck 16 lakhs. Okay, we bought a truck for 16 lakhs. Now on the same day we made a down payments on the side, 1st April 2012 to bank account. Look at this account. To bank account we made a down payment of 5 lakhs. 3, 4, 5. Now on 31st March 2013 we were charged with interest 55,000. So I'll write here 55,000. On the same day, 31st March 2013, we made our first installment. So to bank account 4 lakhs. This only happened in the very first year. Okay. Now we will tally the account. So we have 16,55,000 on both the side. Now from 1650, when you minus 9 lakhs, okay, the value which will remain is the balance 7,55,000. So this is nothing but 31st March 2013 to balance brought down. Now the same balance on the next day, 1st April 2013 will become by balance carried down 7,55,000. Now only 3, you just have to keep repeating interest, installment balance, interest, installment balance. So on 31st March 2014 we were charged with interest. So by interest, second is 37,500. Same date, 31st March 2014 to bank account, the down payment is 4 lakhs, so 4 lakhs. And on same day, 31st March 14 to balance. Only in the first year, remember, we have a down payment, so one extra entry is there. Otherwise only interest, installment balance, interest and installment balance. So I will tally this part. So 77 lakh 55 plus 37 is 7 lakh 92,750. 792,750 minus 4 lakhs will give you 3,92,750. This is by, so it will come on 1st April 2015 by balance 3,92,750. On 31st March 2000 this is 14. So 2015 we'll have by interest. The third interest amount was 19,640. On the opposite side, 31st March 15. Now the installment what we paid was to bank account, which was 412390. When you tally both the sides, it will tally. Okay, that's it. This is how you'll have to solve, the prepare the higher vendors account. Only remember, interest, installment, balance. Only in the first year you'll have down payment. Otherwise, only the three things keep repeating again and again. That was the very first account. Next, they asked us to prepare interest account. So let's see now how do we prepare interest account. Okay, I'll just extend these lines. Okay, now for interest is very simple. Wherever you can see interest, the opposite end. This is buy interest. So here it will become 31st March, same date, to Hindustan Motors account. Amount is 55,000. Okay, that's it. The same amount now you have to transfer 31st March 2013 by PNL account, 55,000, and this year gets tallied out. That's it. You just have to pass that entry. Same way for the second year, 31st March 2014. Again, I'll add to Hindustan Motors account. Second interest was 37,500. Okay, on the same date by PNL account, 37,500. This account gets tallied. Now 31st March 2015 to Hindustan Motor account, third year ka it was 19,640. So same date on the opposite side by PNL account, 19,640. I tally it, and that's it. With that, this particular account is also done. Okay, so I hope everyone have understood this. So these are the two questions which appear in your paper. Okay, so I hope both the sums have been understood, solving both the sum. Okay, so with that we will be ending this video here. Thank you.